Hi everyone, welcome to BlockSnack, your daily crypto wrap-up for Saturday, May 16th, 2026. We break down Bitcoin, Ethereum, and blockchain news, fast, clear, and without the hype. I'm Jack, and I'll walk you through what matters today. If that sounds useful, hit subscribe and follow the channel.
BlockSnack.
In this video, we explore Mubadala's increased Bitcoin ETF stake, Ethereum's potential price surge catalysts, ITKD's financial challenges, GameSquare's crypto holdings, Chainlink's security appeal, the rise of cybersecurity ETFs, and Coinomi's privacy partnership with PIVX. And just as always, a quick disclaimer. This content is for informational and educational purposes only and should not be considered financial advice. Always do your own research. Now, with that out of the way, let's jump right in. Abu Dhabi's Mubadala investment company has made headlines by ramping up its stake in BlackRock's iShares Bitcoin Trust by 16% in the first quarter of 2026. This move is part of a broader strategy to increase exposure to Bitcoin, with Mubadala now holding over 14.7 million shares valued at $565.6 million as of March 31st, 2026. This marks a significant increase from their previous holdings of 12.7 million shares at the end of 2025. Such investments underscore the growing interest from Gulf Cooperation Council sovereign funds in regulated Bitcoin products. Notably, Mubadala's portfolio, which exceeds $330 billion, now prominently features Bitcoin, reflecting a strategic shift towards digital assets. Other entities, including Goldman Sachs and Jane Street, have also increased their crypto exposure, with Texas becoming the first U.S. state to purchase Bitcoin for a strategic reserve. Next, we look at Ethereum's potential for a price surge. Joseph Shalom, CEO of Chainlink Gaming, identifies three catalysts that could reignite Ethereum's momentum. Firstly, the passage of the Digital Asset Market Clarity Act in the US is a game changer, offering much-needed regulatory clarity. This legislation, backed by bipartisan support, is expected to influence global crypto policies, particularly in Asia. Secondly, a return of market risk appetite could drive prices up, as geopolitical tensions ease and the AI hype cools. Finally, the expansion of real-world asset tokenization on Ethereum is a major factor. Currently, about $32 billion in assets are tokenized on Ethereum, with projections to reach $500 billion or even $1 trillion within a year. These developments position Ethereum as a leader in the tokenization of financial assets. Moving on to corporate financials. ITKD, a subsidiary of PT Telkom Indonesia, has reported a decline in both revenue and net profit for 2025. This downturn is largely due to increased depreciation expenses following changes in asset useful lives and accounting policies. Additionally, ITKD is under scrutiny from U.S. regulatory bodies, which could pose future risks despite no material misstatements being found in their 2025 financials. These challenges highlight the broader issues facing companies as they adapt to evolving regulatory landscapes and financial reporting standards. Now for an interesting development in corporate crypto holdings. GameSquare, a NASDAQ-listed media and entertainment company, has revealed its substantial crypto treasury, holding 15,502 ETH valued at approximately $50 million, along with $1.6 million in altcoins as of Q1 2026. This significant allocation to Ethereum, rather than Bitcoin, may reflect the company's strategic focus on Ethereum's smart contract capabilities and its alignment with the gaming and DeFi sectors. However, GameSquare faces risks related to price volatility, regulatory changes, and liquidity that could impact its financial position. In light of recent security concerns, approximately $4 billion in crypto assets have been moved to Chainlink's Cross-Chain Interoperability Protocol, CCIP, following a $292 million exploit involving Kelp DAO's Layer 0 powered bridge. This migration includes over $1 billion in Bitcoin-backed assets from Lombard and reflects a broader industry shift toward Chainlink's secure infrastructure. Chainlink CCIP is noted for its independent node operators, built-in rate limits, and audited infrastructure, offering a safer alternative in the wake of cross-chain bridge vulnerabilities. The rising threat of AI-driven cybercrime is boosting interest in cybersecurity ETFs. With AI adoption growing, the need for robust cybersecurity measures has never been more critical. The S&P Kensho Cybersecurity Index, for instance, has seen a 19.13% gain this quarter alone. Companies have a limited window to prepare against increasingly sophisticated AI-enabled attacks. Investment in cybersecurity ETFs, such as First Trust NASDAQ Cybersecurity ETF and Amplify Cybersecurity ETF, offers exposure to this burgeoning sector, catering to varied investor preferences with different liquidity and fee structures. Finally, Coinomi's partnership with PIVX marks a significant step forward in enhancing crypto wallet security and privacy. Coinomi, known for supporting a vast array of cryptocurrencies, will integrate PIVX's ZK KYC technology to bolster user privacy in multi-chain DeFi transactions. This collaboration aims to address the growing security challenges within the Web3 ecosystem, particularly as crypto asset hacks and thefts have surpassed $1 billion in 2026. By enhancing privacy features, Coinomi and PIVX are setting a new standard for secure and private transactions in the decentralized finance space. That's it for today. Subscribe for daily crypto news, drop a like if this helped, and share it to support the channel. See you tomorrow for your next BlockSnack.